Build to rent is different. It's kind of the 2.0 of what's called turnkey real estate investing, where Chris and I, my partner in the Southern Impression Homes business, we both used to fix up old homes and keep them as for ourselves for rentals or work with investors. And we found the new construction about 10 years ago was a much better way to have less headaches, less maintenance and repairs, longer tenancy, better overall numbers for that generational growth. Because most people I talk to say, I want to have a rental portfolio. If I'm going to own rentals, I want to be able to pass them down to my children. And in order to do that, you got to have them in a certain area in a certain condition. At least that's been my experience. Our sweet spot is single families, duplexes, and quads. We are not going into the big commercial realm. We stay in the residential. We are big believers in residential. It seems to really hold in the strong time. In the so-so times and go up in the stronger times. So this is our recipe: single family, duplexes, and quads. These can all get residential financing, which is really important when you're looking to finance something long-term and get the best cash flow and results. We even are able to offer our own in-house financing, which I'll talk about on that today, that's much lower than the average mortgage rates out there. Now, people say to me, well, is it worth owning your own rental property? I'm a doctor, I'm a medical professional, and I'm busy. I don't want a second or third job. But I've heard about some friends that have done well in real estate. You have other friends that haven't done well. So let's look at first, can you make money, and is it worth it to have a little bit of extra effort of owning your own property? If you had invested $250,000 into the S&P 500 5 years ago, you would have averaged a 10.49% return. Very good return. Now, if you had invested in a real estate fund, which are great, go to my friends over at DLP. That's how Jim and I actually met. They could have earned you maybe 13.5% annual return, which is a great return. However, when you look at home ownership, if you had bought into $250,000 put into our build to rent program in Jacksonville, Florida 5 years ago, your average annual return would have been just over 69%. This is the advantage of owning property personally and the growth that it can occur, especially when you're patient, looking long term, and in the right markets with the right management. Again, look at this chart from the Fed. Real estate historically has always gone up. Yes, there will always be little blips, which we've seen even looking here that time in 2008 where it did go down for a little while. And within 7 years, it was back up above where it was. But over long, especially any 10-year period, and certainly this last 100-year period we're looking at, it has always gone up. And that's why a lot of the bigger groups look to us to buy property. So Blackstone, we used to actually sell properties to Tricon. They bought this group Tricon for $3.5 billion in the beginning of the year. What is this company made up of? It's made up of the investments that we offer to our clients and do for ourselves. So we know that if these biggest money groups in the world are banking further on our model, that's good for not only us, but for you as well. So a couple things, there's three types of investors really in real estate investing. It's almost like a triangle. At that effective level, that's kind of the base level. That's where I started out. You like to get into the market, meet realtors, find properties, research the areas, hire contractors, oversee the rehabs, look at, managing the property on your own. You're very involved. You have the time, you want to do that. It can be a very good way to get going, as long as that's what you want to do. At the second level, the enhanced level, what we see, Jim, is it's where you want complete hands off. I am super busy in my career. I don't want anything. And this enhanced level is where you write a check. Like I said, maybe you've written a check to DLP, and that's great because you'll have really no involvement except for looking at your statement at the end of the month. And then you're not getting any time involved. Now, at the engaged level, we try to get you a little bit more exposure to ownership without a lot of that effective level work to it. A lot of our people that end up coming with us at the engaged level, they don't want to find the properties on their own. They don't want to figure out financing. They don't want to research the areas. They don't want to deal with contractors or manage their own properties. And that's where we step in, not only with a certain type of property, but only new construction. We've become really, really serious about that. And that was pretty hard for a guy like me who made his bones rehabbing, thousands of properties. But I gave that up about 7 or 8 years ago because I saw that new construction was a better formula for the overall good of not only our company, but our investors as well.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.